No matter the type of forex trader you are, whether you are a day trader, swing trader, positions trader, or scalper, every forex trader have to take two decisions in the market. It's either the buy decision or the sell decision. No matter the type of forex trader you are, you're going to be able to take either one of these two decisions. It's either you're buying or you're selling. So on today's video, I'm going to be telling you guys how you can be able to make the decision whether to buy or sell a particular currency pair. Hello everyone and welcome to my channel. My name is Olof. On this channel we talk everything about trading, business, personal finance, motivation and tips to help you stay profitable as a forex trader. So if this is your first time coming to my channel, please hit the subscribe button below to subscribe to the channel so that you can be updated once we come up with relevant content like this. So on today's video, let's see what we're going to be covering. On today's video, we're going to be covering forex market drivers. Let me just go back. So let me go back here. So on today's video, we're going to be covering forex market drivers. So what moves the forex market? We're going to be covering the decision to buy or sell a particular currency pair. So how do you make a decision to buy or sell a particular currency pair? We're also going to be covering what we call counter fundamentals in forex, and we'll be covering more about margin trading. So this is just the basics of what we'll be covering on today's video. All right. So without taking much of your time, they say forex market drivers. So what drives the forex market? What even causes the forex market or the chart? When you open your chart and you see it going up and down, what caused the market to either go up or down? When it comes to forex drivers, or what caused the forex market to either go up and down, you have what they call demand and supply. It's very simple. When it comes to demand and supply, you see, if the demand for any particular currency is high, it means the price of that economy, it means the price of that particular currency pair will go up. And if the demand for a particular currency is low, it means the price also will be low. And if the supply, if supply coming to supply, if the supply of a particular currency is more than the demand, then the price of that particular currency will go down. And if the supply of a particular currency is less than the demand, then the price will also be high, because it will create what we call scarcity. All right. So the demand and supply is one of the most important, one of the fundamentals of price movement in any currency pair. All right. Then the next thing we also check is fundamentals. Fundamentals just stand for news. Anytime a president of any economy speaks, or anytime you go on your investing.com or any news website you use, and you check and you see any particular fundamental, let's just see, fundamentals, you have things like the GDP, gross domestic product, you have consumers price index, CPI, you have fundamentals like employment change. So those are data that as a forex trader you need to monitor concerning that particular economy. If the data is high, if the GDP, let's just take Great Britain pound USD as an example. If the GDP of Great Britain pound is high, it means the Great Britain is powerful, and as such, the Great Britain pound, the price or the currency, the exchange rate between Great Britain pound and USD will also be high. All right, and if the GDP or the CPI is also low, it means the Great Britain pound or the Great Britain pound USD will also be low. So you have to also be looking at fundamentals when you trade forex, because fundamentals play a bigger role. Then when it comes to now a speculative, central banks and hedge fund, and you also have what we call monetary policies, which under monetary policies you have what we call currency intervention. So let's just say the government is trying to discourage its citizens from using a particular currency, or try to discourage its citizens from possessing or from having a high quantity of a particular currency. What they do is they come in with what we call currency intervention. That currency intervention can be to increase the currency exchange rate. They can be to increase the charges you need to you incur if you want to own that. So we come in with those policies. With those monetary policies, we actually encourage or discourage the citizens from owning a particular currency. So it's used more like most of the times, currency intervention is used like an economic interventor, right? So it's used for economic intervention or as an economic indicator to regulate the economy. All right. So with that being said, those are forex movers or forex drivers. What drives the forex market? Beside this, any other point wouldn't be of any importance. But if you come to this board, the most important points you need to look at is demand and supply and fundamentals. So as we go ahead, demand and supply, then with fundamentals. These are the two most important points you have to, the two most important forex market drivers. These are the two most important. Any other one will just be them to support the movement. But what we'll be focusing as we move ahead will be demand and supply and fundamental, because those are the two most important things that actually moves the forex market. So as we move along in the course, I'll be teaching you how demand and supply can, how you can use the power of demand and supply to either buy or sell a particular currency, and how you can use fundamentals, fundamentals or news to also trade forex. So as we move ahead, we'll have more to cover about that one. So buy or sell a currency pair. How do you make a decision to buy or sell a currency pair? So let's take in case where the United States dollar is the base currency. Meaning the United States dollar is the first currency on the currency pair. All right. So here we have two currencies. We have the United States dollar and we have the Japanese yen. And the currency pair we are seeing USD JPY. All right, that's a currency pair, USD JPY. And on this currency pair, we have the United States dollar as the base currency. Remember, we talk of the base currency and the quoted currency. All right. In any currency pair, we've already spoken about this on our recent videos. A currency pair consists of two currencies, the base and the quote currency. The base is the first currency and the quote currency is the second currency. On this currency pair, we have United States dollar as the base currency, Japanese yen as the secondary or the quote currency. All right, so let's just assume a news. Let's use any fundamental, because we already spoke what moves the forex market, right? We already say demand and supply and fundamentals are the most important points you need to look at when it comes to what moves the forex market. So let's take fundamentals as an example. Maybe let's take something like the GDP. Let's take the GDP. So let's say you go on any investing website or on any news website, and you see a particular news shows that the GDP for the United States dollar is positive. All right. Let's say the GDP for the United States dollar is positive. If the GDP for the United States dollar is positive, since on this currency pair we have the United States dollar as the base currency, it means you buy. All right, it means you buy this particular currency pair. Since we have the United States dollar as the base currency, the Japanese yen is the quote currency, and there is no fundamental supporting whether to buy or sell. But any decision you take on this currency pair, supports the base, should be based on the base currency. All right. So any decision you take on the base on this currency pair, it should be in line with the base currency. So if we choose to sell, if you press sell if you go to your MT4 or your MT5 and you press sell, it means that decision will be directly affecting the base currency. All right. So let's just assume the GDP is positive, and instead here you are selling. It means you are going against the market. You are going against what the fundamentals are telling you. So that is how you made the decision to either buy or sell a particular currency. You have to first of all ask yourself which one is the base currency and which one is the quote currency. If that fundamental is supporting the base currency, then the first decision you are making should be in line with the base currency. Now, I'll show you guys an example where the United States dollar is instead the secondary currency, so that you should be able to understand the different scenarios. All right. So let's just assume now, instead of talking about the United States dollar, our fundamental was instead supporting the Japanese yen. And for the Japanese yen, the GDP was positive. All right. If the GDP for the Japanese yen was positive, since we have the Japanese yen here as the quote currency, we'll instead say this particular currency. All right. Since we have the Japanese yen here as the quote currency or the secondary currency, instead of buying this particular currency, we are instead going to sell. we're instead going to sell this particular currency pair since we have the Japanese yen as the secondary or the quote currency. All right. So that is that when it comes to you making the decision to either buy or sell in a particular currency pair. Ask yourself, which one is the base currency and which one is the secondary currency? And if you are choosing to buy this particular currency pair, it means that you should have supporting points that show you that the United States dollar is strong. Or if you are choosing to sell this particular currency pair, you should have supporting points that show you that the United States dollar is weak. All right. So let's take in a case where the United States dollar is the quote currency. Remember on our previous examples, the United States dollar was the first currency, was the base currency. But now, instead of having the United States dollar as a quote currency, as the base currency, we have the United States dollar as a quote currency. All right? We have the base currency here. We have the base currency versus the quote currency. These are two economies involved. We have the Great Britain involved, and we have the United States involved. All right. So now, since we have the United States instead as the quote currency, we instead have the United States dollar as the quote currency. What is the decision that we can make? Taking down a fundamental as an example. So let's take our GDP again. Let's take GDP. Let's just assume the gross domestic product for the United States dollar is positive. If the gross domestic product for United States dollar is positive and we are trading the Great Britain pound USD, what is going to be the decision here? I already explained to you guys that the decision you should make if I already explained to you guys that you should make the decision to buy or sell based on the base currency. But in this situation, we have the United States dollar as the secondary or as the quote currency. So in this case, since the United States dollar, since the GDP is positive, showing that the United States dollar is strong, instead of buying this particular currency pair, what we do is, since it is the secondary currency pair, since it is the secondary currency or the quote currency, we are instead going to sell. You are instead going to sell this particular currency pair. All right? Since it is the secondary currency. If it was something like USD JPY, we're instead supposed to buy this particular currency pair. But in this case, we have the United States dollar as the secondary or the quote currency. So that's how you make the decision. You make the decision to buy or sell any particular currency pair. And if this news was instead supporting the Great Britain pound, let's just assume the GDP was in terms of was for the Great Britain, was in UK, and the GDP was supporting that the Great Britain pound will be positive. What we'll do here is, since the Great Britain pound is the base currency, we'll instead buy. All right, since it is the base currency in this case, we'll instead buy the Great Britain pound USD. We'll instead buy that particular currency pair. But in this case, we're talking about the United States dollar. And since it is a secondary currency, we are instead going to sell. Okay, what about if the United States dollar is negative? Let's just assume we are good. Let's take NFP. Let's take NFP for example. NFP. If you can check, NFP just stands for non-farm payroll, and it is data released, I think it's last Friday or second Friday of every month, which shows the total number of jobs created in the United States out of the agricultural sector. That is the total number of jobs created, excluding the agricultural sector. All right. So let's just take non-farm payroll for an example. And our non-farm payroll, let's take the data as negative, because last Friday non-farm payroll came out and the data was negative. So in this case, since we have the data for the United States, and non-farm payroll is affecting what? It's affecting the United States dollar. And since the data is negative, and on this currency pair, the United States dollar is the secondary currency, what are you supposed to do? We are supposed to instead buy this particular currency pair. All right? We are instead supposed to buy this particular currency pair. Since the data is negative, and the United States dollar is the secondary currency here. If the data was negative and the United States dollar was the base currency or the first currency, we were supposed to sell. All right, we were supposed to sell if we were having something like United States dollar CAD, Canadian dollar. If we're having United States dollar, Canadian dollar, we're instead supposed to sell this particular currency pair, since we have the United States dollar as the first or the base currency. That is why if you check your NFP chart, if you go back to your MT4, your MT5, and you check the chart, immediately the news was released and it was negative for the United States dollar. If you check the chart for Great Britain pound USD, you see that the chart was actually going up. Or if you check the chart for gold, gold is written as SAU US. Let me just put something like SAU USD. All right. Here we have USD also as a secondary currency. So if you go on your MT4, and you check the chart for gold, you see that the gold was instead going up since the data was negative. So that is how you make the decision. You make the decision to either buy or sell in a particular currency pair. You need to ask yourself which one is the base currency, which one is the quote currency, and is the fundamental or the news affecting the base or the quote currency. That will enable you to be able to make the precise or an informed decision when it comes to trading. All right. So with that being said, let's talk about what we call counter fundamentals. Counter fundamentals is a situation where you have two fundamentals, you have two news events. We keep talking about fundamentals because they are one of the major drivers when it comes to Forex. Remember, we already talked about major drivers, and we spoke of demand and supply, and we also spoke of fundamentals. So let's take for this, and we are talking about counter fundamentals. Let's take NFP and employment. Let's take NFP here. Let's take NFP. Let's take NFP and for the United States dollar and CAT. And for the Canadian dollar, let's take something like employment change, all right? Because if you check on every Friday, normally when the NFP used to come out, we used to also have another fundamental on the Canadian dollar. And they happen at the same time. If it is to happen at 2:30 p.m., all the news on NFP and the news on the Canadian dollar, they will all come out at the same time. So if you are not very careful, the two news events will produce what we call counter fundamentals. Let me explain to you the situation of counter fundamentals. Let's just assume NFP, right? Non-farm payroll. Remember, non-farm payroll will affect the United States dollar. So since it measures the total number of jobs created in the United States. So let's take non-farm payroll, for example. Let's just assume non-farm payroll came out and the data is positive. The data is positive, showing you that the United States dollar is strong, or showing you that the United States dollar or the United States economy is strong. So if you have such factor that is supporting, showing you that the United States dollar is strong, it means for this particular currency pair, United States dollar CAD, the decision will be supporting the fact that you have to buy. All right, the decision will be supporting the fact that you have to buy this particular currency pair. Good. Now, we also have another news event that is happening at the same time. Remember, I said if you check on your chart, there used to be a situation where you have two news events happening at the same time. At the same time, we have Canadian dollar employment change. And the Canadian dollar employment change, let's just assume it came out and it is positive too. All right, it came out and it is positive. If it is positive, if it is positive for the Canadian dollar, and since we have the Canadian dollar here as the secondary currency, it means if it is positive, what we'll do is we'll instead have to sell this particular currency. We'll instead have to sell this particular currency pair, since the data for the Canadian dollar is positive. All right. Remember, I already explained to you guys that if it is positive and the currency on the currency pair is the quote currency or the secondary currency, we are selling. So there's one news event that is telling you that buy, and there's another news event that is telling you that sell at the same time. That is why if you check on your MT5 at that time, you will see something like this. You just see your chart will do something like this at the same time. At the same time, your chart will just go up and down, up and down, up and down, up and down. Trigger all your positions and blow up your account, because we have what we call counter fundamentals. One news event is telling you the chart will go up, and one is telling you the chart will go down. So there will be a lot of counter news, counter demand and supply, and counter interactions happening at the same time that you can make an informed decision. All right, so that is what we call counter fundamentals. When you have two news events or two fundamentals affecting the same currency pair at the same time. So how do you trade when you have a situation of counter fundamentals? What you do is, the best advice is to just stay out of the market. If you are not too sure what is going to happen on either on both fundamentals. If you're not sure on what is going to happen on both fundamentals, which nobody ever knows, the best thing you can do is just to stay out of the market. When the news is released, you can then come out and use technical analysis to get into the market and take trade, instead of trying to catch a falling knife. Because trying to trade when you have counter fundamentals is like trying to catch a falling knife. So that is that when it comes to counter fundamentals. All right. Okay, so let's go to okay. So with that being said, we've come to the end of this particular video. On this video, we spoke about what gives you the ability, or what gives you that supporting factor for you to either buy or sell a particular currency pair. We've spoken about what we call counter fundamentals. We've spoken about counter fundamental, and we've also spoken about Forex market drivers. So what drives the Forex market? So those are the takeaways you should be able to take from this particular video today. So if you have gotten some value so far to this particular level, please leave a thumb up on the video. Leave a thumb up on the video. It means a lot. It shows us that at least you're getting some value from the video. And also follow this playlist. There's a playlist that I'm going to leave over here that shows all the videos we've been able to post about the course. And if you are watching and you haven't subscribed to the channel yet, please subscribe to the channel. And till then, I'll see you guys on another live video. Peace.